Welcome to the NSCHBC Edge podcast, leading the way in the business of medicine. Now here's your host, Terry Fletcher.
Hello, everyone, and welcome to the NSCHBC Edge podcast. I'm your host, Terry Fletcher. The Edge podcast is brought to you today by the National Society of Certified Healthcare Business Consultants. Our goal is to discuss healthy business principles, have conversations on the business side of medicine, so that you and your practice can thrive, be profitable, and successful for years to come. This week on the Edge podcast, I welcome back healthcare attorney and fellow NSCHBC member, Amanda Waesch. Amanda operates a national healthcare legal practice and is licensed in both Ohio and Florida. Our topic of discussion today has been headlining the healthcare news in the last, I want to say a couple of weeks, but I think it's actually been a couple of months. And that is the Provider Relief Funding Single Audit Act. And many of you may not know what that is. And luckily we have a legal expert in mind here to let us know what all goes into that. And so we're going to go ahead and dive right in. So good morning, Amanda.
Good morning, Terry. Thank you so much for having me again.
Yeah, no, I'm happy to have you. And actually, Amanda is always there for me if I'm like, I need a guest. we have people that are like, well, I'm kind of busy right now. And I'm like, Amanda's like, I'll do it. I'm like, yay. So I'm really happy that you're here.
Oh, of course. And I would not miss it for the world. I think this is such a great podcast. And I do want to congratulate you because I haven't had a chance to publicly congratulate you on your nomination for one of the best female hosted podcasts. That was a really fantastic nomination, and you did such a great job. So congratulations.
I appreciate that. Thank you very much. So what do we want to talk about is the single audit requirements. And first of all, before we jump in, let me ask a question, because I know I have clients, you may have clients as well, and we're talking about physicians, hospitals, and healthcare entities, that when they hear audit, they hear what I hear in my wheelhouse, which is you could get audited for XYZ, for, billing practices or poor documentation or, false claim act, things like that. But this is different than that, right? They're not coming to you. That's right.
That's right, Terry. The government is not coming to the providers in the single audit world. The burden is on the provider to determine, am I subject to the single audit requirement, and am I required to proactively perform a single audit and then report that to the Office of Management and Budget? So the burden is on the provider. And let's take a step back, Terry. I mean, the provider relief funds, while they certainly were necessary for many of our providers to help them keep the doors open and the lights on and provide necessary healthcare services, there was so much confusion, especially in the beginning. A lot of them woke up, they found that there was this, huge deposit that was in their account. They didn't know what it was for. They didn't know what to do with it. Some of them returned it, right? And now they can't get it back. Some of them didn't know what, they misused the money. They didn't realize they had to report. And then you add on top of it a single audit requirement. Most of our providers, at least that I work with, are for-profit. They are not the recipient of government grants or funding. And so the concept of a single audit is so foreign to them because they don't deal with it. Now, my FQHCs, my nonprofits that are used to getting governmental grants and funds and having to look at, and analyze, hey, do I have to do a single audit? This was less of a foreign concept to them, but it did take everybody by surprise. And the government said, oh, no, you are subject to single audit and you need to do this. And so here we are scrambling, trying to educate these poor providers and also trying to find someone that has knowledge, not only in single audit, but in the provider relief funds, which is a brand new program that really didn't have a ton of guidance. And over the past few years, we've seen commentary and guidance be issued. And I hate to use this phrase because you're not supposed to use it, right? They were literally building the plane while they were flying it with this program.
Yes.
So you put all of that together and no wonder people are confused. Sometimes I'm confused,
Yeah, I mean, me too. Well, because I'm getting obviously a lot of client questions. I'm sure your phone was ringing off the hook when that money first came in. And just to clarify for our listeners, what we're talking about is the HHS, so the provider relief funding that, again, Amanda mentioned, that was kind of dumped in your checking account. The first two phases, you really didn't have a choice because that was just put in your account and you're like, what is this? And it was estimated as a certain 3-month period. I think they used 2017 or 19 or something. But then you had to actually apply for phase 3 or 4 to get more. But here's the problem. Federal funds also came in the form of PPP loans, EIDL, Advanced Accelerated Medicare. And so there were so many, and which are now obviously people are getting offset checks to have to pay that back because that was actually a loan, not a grant. But here's where the confusion lies, I think, and please correct me if I'm wrong, but I think that when you hear audit, and first of all, this is for recipients or entities that had, and here's the interesting word they use, that either received $750,000 or more in federal awards or spent it. Correct me there. What is the actual qualifier?
That's a great question, Terry, just to help us level set. So the providers that are subject to single audit are those that expended more than $750,000 in their fiscal year. Okay, so you had to expend more than $750,000 in federal awards, and that had to be expended in your fiscal year. Well, everyone has a different fiscal year. It doesn't necessarily mean a calendar year. So if you are the recipient of not only provider relief funds, but other federal awards and grants, that could have pushed you into the $750,000 realm. So it's an aggregate amount of federal awards that are subject to single audit. So I have several providers that may have received $300,000 or $400,000 in provider relief funds, but they also received other grants from federal programs that may or may not have been related to COVID, and then some state grants and funds that were pushed through from federal programs, and that put them in to the $750,000 realm. And then we have to look at, well, did you expend all of that money in your fiscal year?
Right. Did you get it? Did you spend it?
Right. Did you expend it? But here's the other problem with the provider relief funds. The provider relief funds had a usage period of anywhere from 12 to 18 months.
You're such a fly in the ointment.
Right? That didn't necessarily correspond with the provider's fiscal year or a calendar year. So there needed to be some additional guidance that was issued, and that was, that was worked out between the Office of Management and Budget and HRSA. And so there was a lot of confusion. But basically, if you received more than $750,000 in provider relief funds, I'm going to guess that you probably kept that and did not return it and used all of it based on the new guidance that we had. And you're going to be subject to single audit. And it's going to be very easy for the government to determine who needed to self-report and who didn't meet that obligation.
Well, so here's a question on this, because you talked about self-reporting. So I'm reading through some of these requirements, and everybody, if you need to find it, it's on the hrsa.gov Provider Relief Reporting Audit Requirement website. It actually has it on there. But I'm reading through it, and first of all, seems like it was a surprise. I didn't see this in the beginning, so this all of a sudden started coming up. I'm like, what is this? Because I think a lot of providers think, well, if we had to fill out the forms to account for our expenditures, why do we have to do this now? So is this basically an oversight on top of that?
That's a great question. The single audit has been around for a long time.
Okay.
So any entity that received specific federal funds and grants that are subject to single audit are required to do this. I think it was a surprise that the government chose to say, yes, the provider relief funds are going to be subject to the single audit requirement. There was a lot of confusion in the beginning. Is this a grant? Is this a loan? What is this? Is this taxable? Is it not taxable? And it took some time for the government to get together and say, you know what, this is includable in taxable income, and this is going to be subject to single audit. And that took a couple months for the government to come out and clarify, what are we going to call these provider relief funds? Again, these were funds that were pushed out at the end of March, early April.
2020.
People didn't, in 2020, providers did not know that they were coming. It was a very confusing time. And they were touted by lawmakers as a no strings attached monies that were going to be given to healthcare providers to help get them through the pandemic.
Right. It was actually tied to COVID to start, and then they started changing it. Oh, well, now you can include this. Oh, well, now you can include that. So I think that the confusion around this is crazy. Well, the other thing I noticed on this, here's a question. You think you're just the fly in the ointment. Oh no, here comes Terry. So here's a question that I'm getting from some providers. And I know they should not have done this, but they don't always listen to us. So I'm going to put it out there. A lot of physicians that got this money basically said, well, I kept part of it in a separate account just to use for a rainy day in case I need it. You weren't supposed to do that, correct? If you didn't need it immediately, weren't you supposed to give it back?
Yes. So the provider relief funds, they are used for a particular purpose, and it's in the statute, and that's never going to be able to be changed unless we have an amendment to the statute, which I don't think is going to happen.
No, I don't
and
either.
The purpose of the funds was to assist providers in preventing, preparing for, and responding to COVID-19. So expenses that are related to preparation, response, and preventing COVID-19, or lost revenues attributable to COVID-19. And there has been a lot of clarification over the past 2 years. Okay, well, what are eligible expenses and how do we calculate lost revenue? And what we've seen over the past 2 years is the government really saying, providers, we want you to be able to keep this money and use this money. We want to make it very easy for you to use this money. But you have to use it for those purposes. And you also have to use it within a certain time period. And if you don't, then you're going to have to pay it back. But really, when you look at the definition of, well, what expenses can we use this for? And how do we calculate lost revenue? All providers, so long as they remained in business, should be able to use these funds, because we can use the money for rent, mortgage, to pay our employees, to purchase supplies, utilities. And so we should be able to use these monies. And for the period one, for phase one, we had a usage period of 18 months. So providers could carry that forward into the next fiscal year. And so the government really, as time went on, made it a lot easier for providers to be able to use the money and retain the money.
But that did keep evolving, right? They kept changing what they were saying about how you're like, you're kidding me?
Yes, yeah. It did.
I kept seeing on our NSCHBC website, or on our listserv, which everyone, if you want something great, join our organization, because that listserv, oh my gosh, talk about a wealth of information. I kept seeing all the healthcare CPAs and attorneys on there going, no, wait, wait a minute. I was like, oh my gosh.
Right. It was, these expenses are eligible. Now these expenses are not eligible.
I know.
Now this is how we're going to calculate lost revenue. You have to use expenses first. No, now you don't have to use expenses first. So literally they were building the plane as they were flying it. And they were still issuing guidance during the first period of reporting. So the portal opened for reporting in July of 2021, and it was open through the end of September. Well, they had to they kept it open to the end of the year, basically, because it was, hey, we're still issuing guidance in October and we're changing the rules. And, and we're not seeing a whole lot of people report, and it's very confusing. We're getting a lot of questions. So it was just, I think that at the end of the day, when it comes to reporting through the portal, HRSA is going to be very forgiving if they go back and audit these providers. There's a 3-year look back period. Right. And I think they will be very forgiving and, hey, we were issuing guidance continuously. It was changing. If you reported and you reported in good faith and you reported as much information as you could, or that we requested of you based on the information you had available to you, we really want you to keep this money.
Yeah, that we just have to account for it. It's more of an oversight thing, correct?
It's more of an oversight thing. Okay. Now, the single audit, those are for the players that got a lot more money, presumably should be a little bit more sophisticated because a larger organization received a lot more money. And there were some delays in the reporting. So there were some grace periods because instead of a 12-month use period, we had an 18-month use period. And we had to give time for the CPAs to catch up on the guidance. And so there was some grace period there. And then also, HRSA and OMB got together and said, we're just going to require you to report what you reported in the portal. So what you reported in the portal should match what you're reporting for single audit. Now, there is some additional testing requirements that are required under the single audit, but really your numbers should match. So it should be a fairly painless process. But still, my recommendation is that you get a CPA that is knowledgeable in single audit and is knowledgeable with the Provider Relief Fund.
Well, and what I read on, not just on HRSA, but a couple of the government websites that talk about this, and let me know if I'm on the right track, is that, and this is where maybe our listeners or certain providers aren't aware of this has to be conducted by an independent auditor who knows what they're talking about. Like you said, a healthcare CPA that has experience in the provider relief funding arena, because it can't just be, you're not just filling out a form on the website anymore. This is actually an independent audit where you have to conduct it, figure out what happened, and then make sure it kind of hopefully relates to what you put in there when you reported, and then submit that, correct?
Yes, absolutely. Absolutely. Okay. So not only are they looking at, okay, are these proper expenses? Show me the receipts. Show me how you accounted for these. Show me that they were paid. How, really testing the flow of money. And then, your calculation of lost revenue. What methodology did you use? Where's all the supporting documentation? They're also, so part of an audit. So I do not have an accounting. I'm not a CPA, but I did major in accounting. So I have an accounting degree, Terry. So I'll give that little disclaimer.
And you decided to become an attorney. You're like, yeah, I'm gonna do the legal side of it instead.
Yeah, I was like, yeah, exactly. I'll go to law school and I'll work with my colleagues. So when it comes to auditing, there's also some testing. So we're not just looking at the finances and following the money. We're also looking at, were you aware of what the requirements were? So did you have policies in place? Did you have training? Also, there are some rules regarding balance billing and out-of-network billing under the Provider Relief Fund rules. So make sure that you're looking at those regulations and the guidance very carefully. There's also requirements if you were using a vendor, making sure that they're not excluded, making sure that they sign an attestation. So there are some operational requirements. And so part of an audit from an accounting perspective is that we're auditing the money, but we're also auditing the operations to make sure that it's compliant. And so that's an aspect of the single audit that your independent auditor is going to be knowledgeable or should be knowledgeable about and is going to report on when they go to report on their single audit.
Now, I noticed that the OMB had given some extensions to anyone who hadn't filed by a certain date, which to me, it seems like first thing you would look at is, look at your due dates. When are things due? And, figure out where your fiscal year is and all that. And now you've got to look at, okay, do I need an extension because I'm not going to make it? Do you have to apply for an extension if you haven't filed yet?
So there were some initial, so this is kind of a two-part question or a two-part answer. So there were initial extensions in the beginning because we realized very quickly, okay, we've got an 18-month usage period and the single audit is based on a 12-month fiscal year audit, right? So we had to reconcile the fact that our usage period was not a 12-month period. And so there was an extension of time that was provided to kind of give providers an extra 6 months based on the additional 6 months of the usage period. Also, we realized, we have an affirmative duty to report on the HRSA PRF portal. How can we streamline this for providers that really are not used to, nobody has done the PRF reporting, right? So nobody's used to it. And then they're also not familiar with the single audit requirement. So how do we marry those two? And there was some additional guidance that said, okay, whatever you report financially in the portal, you can also report on the statement of federal awards and expenses.
Yeah. Okay.
Or expenditures.
Okay. So that makes sense.
Yeah. Now, if you miss the date, if the single audit date, if you miss the deadline, that is not something that you can go back to HRSA and say, hey, I missed the deadline, can I report? Because HRSA is only has oversight over the PRF program and the reporting on the portal. So if you go back and you tell HRSA, hey, I missed the reporting in the portal, but I'm willing to report, they have been lenient and they have allowed providers to report late and still keep the funds. If you miss the deadline for the single audit, that's when I'm going to have to tap out and say, let's work with your accountant. What do we need to do with the OMB? Because, they're responsible for the single audit deadlines and, any extensions beyond the due date.
Okay. Now, when somebody's hiring an independent auditor, so from my perspective, when I try to tell clients, and please add to this, is that first of all, from what I've read, it has to be somebody outside your organization, so that's what independent means. And because of the unique nature of the single audit, you can't just trust any CPA. So you don't just look, I know this sounds old school, you don't just look in the yellow pages or go online and find somebody. You need to find somebody that specializes in single audits, maybe and ask them, have they taken continuing education courses required by government audit standards? I was looking at that as well, so that you can tell if they're a specialist in that area and understand the deadlines. Would that be a good place to start?
That would be a great place to start.
Okay.
And I would also have a good conversation with your accountant. From my experience, not all accounting firms do auditing because It is specialized, right? We're not just looking at the money and the finances, we're also auditing the operations. So it's a particular art and expertise, and not all accounting firms do that. That's okay, because these are specialists within the accounting world.
I don't think a lot of providers know, though, you have to go outside your organization or it has to be independent.
Right, exactly. Yeah, exactly. You have to go outside your organization. It has to be independent. You can't do it internally. And you've got to find someone that does the specialization, that does do the auditing, has auditing insurance, right? So has the specialization, has the experience, has the insurance, but then also is familiar with single audit, which is a particular type of audit for entities that receive government funds. So we're reporting to the Office of Management and Budget. There's a particular protocol and process, and you have to have some kind of familiarity with the provider relief funds because you're auditing compliance with the guidance.
Right. And also one of the things, we always talk about this just in regular business transactions, is that, garbage in, garbage out. Remember, the person that you hired to be your CPA auditor independently, they can only assess what you provide. So it's important that I'm talking to the listeners, you have to be transparent. You have to be methodical when presenting them with information. You need to organize your federal grant information, including any award documentation that you received. I know some of those awards had assistant listing numbers, but that has to be easily summarized for your auditor. Otherwise, it's going to be kind of a mess, I would think.
Right. Absolutely. And hopefully you worked very closely with that auditor on correctly reporting through the PRF portal, because whatever you reported there has to match what you're going to report on the CFA, Statement of Expenses and Federal Awards. And that should also match your financial records, which should also match your tax records, right? So it all kind of goes together. And so that's such great advice, Terry. Avoid the garbage in, garbage out, and definitely utilize someone with expertise in this area. And we are so blessed through the NSCHBC to have quite a number of CPAs that do the single audit and are familiar with the PRF program and can assist our clients. I know that I have utilized a number of experts in our organization, and my clients are so grateful.
Yeah, myself included, because as you know, my wheelhouse is revenue cycle management, coding, billing, compliance, and I hear all this tax information and provider relief funding. I'm like, wait, I have a person for you. All right. And that helps us tremendously. So we definitely hope our listeners are taking advantage of that as well. So in wrapping this up, can you just give maybe 5 tips to get this started and to maybe make sure that everyone is heads up is that this isn't optional. This is mandated, because I just saw it on the OIG website as well.
Yes, the OIG will start. The OIG is going to be the enforcement arm, right? That's going to look at, conduct investigations and look at providers that maybe did not report altogether, or their reporting doesn't look like it should. So here's my overall, I guess, takeaway thought.
Okay.
The government it's going to be very easy for the government to audit the PRF reporting and the single audit that they receive. They can easily identify those providers that received money and didn't report, right? So that's low-hanging fruit, super easy. So you want to make sure, if you're compiling a checklist here, that you did report on the PRF portal and you have confirmation that you reported. You're not going to have confirmation that it was approved or that everything was good, right? That's what people are looking for. You're just going to have confirmation that your report was successfully submitted. So low-hanging fruit for the government is, hey, did everybody who was supposed to report? The second thing that they're going to look at is, did you receive more than $750,000 in provider relief funds? Again, that's really easy to identify, and that's actually a question on the portal. Are you subject to single audit? And if you are subject to single audit, they can tell very quickly who did not file a single audit, right? So checklist number 2 is, am I subject to single audit, and did I correctly perform the single audit and submit it to OMB?
Right. Okay.
So those are going to be really easy for the government to figure out who those individuals are. And then I think the third thing that the government is going to do is look at similarly situated providers, whether it's by revenue or by specialty or by region, and look at what was reported and look for discrepancies and look for outliers. And we know the OIG does this, right? So Terry, you do a lot of this work. A lot of providers fall victim to audit because they are outliers. And so they'll be looking for, people that reported garbage and, and saying, why did you report garbage? This doesn't look like everyone else. Let's take a closer look at that. So I think that's going to be the third area that the government looks at, and it's going to be ripe for audit. And remember, there's a 3-year look back period. And so I'm not surprised that the OIG has hopped on this because of shorter look back period, and the fact that we had so many providers that just failed to report.
Which actually, so my last remarks on this as well, just to be aware, again, to our listeners, what Amanda and I are actually talking about is the $750,000 category of the single audit. If you receive less than that, you still had to report what you received and how you spent it. So you don't think that you're still out of having to report your information. This is just almost an additional audit. Well, that's what it is actually, of those higher received funds and expenditures. Would that be fair?
That is a perfect explanation, Terry.
Okay.
This is above and beyond everyone's general reporting responsibility.
Okay, good. All right. Well, hopefully this gave everyone and our listeners some insight as what you need to report. We're at the end of the year, and at the end of 2022, this is really important tax information, and also information to make sure that you're above reproach, you're being proactive, and just know that this is a requirement. We wanted to make sure you had it before the end of the year. So Amanda, thank you for being on the podcast today. We truly appreciate your legal and business insights and on this very timely topic. And we just really appreciate how valuable you are to our members and hopefully potential members out there.
Great. Thank you so much for having me, Terry. And congratulations on a great 2022. And again, on your nomination for this podcast. Thank you for all that you do.
Thank you very much. You can reach Amanda at NSCHBC.org. Go to Find the Consultant tab and type in her first name, and her information will pop up for you, same as my information. Also, make sure you do check out our website at NSCHBC.org. Find our educational opportunities that we have. We have our Medicare fourth quarter update that's coming on the 20th of December. We also have free webinars, and we'll have a new updated titles for you for 2023. Don't forget our winter workshop in Arizona this year in January, and then also our annual meeting that'll be next summer in June. So everyone, make it a great day, a great rest of your month, happy holidays, and thank you for listening to the NSCHBC podcast.
Thank you for listening to the NSCHBC Edge podcast. Join us on the second Tuesday of each month as our consultants tackle the complexities of navigating the business of medicine. You can reach us on the web at NSCHBC.org, the National Society of Certified Healthcare Business Consultants.